In Investing 101, we are about to find out, is this a good time for small investors to get into the stock market? For more, we have John Bever, the president of Phase 3 Advisory. Hello to you, John. You are registered principal with Royal Alliance Associates. And what do you think about the stock market? Should small investors be getting in at this time?
What I think is going on here is that the market is doing what it always does, and that is it is estimating future earnings and weighing how much to pay for those earnings. So is there an opportunity right now for investors to take advantage of it? Not as much as there used to be, because right now with interest rates being as low as they are, this has created very high valuations in the stock market because investors are demanding more return from their stocks than their bonds. But with bonds being so low, they're not demanding that much return for stocks. And then this creates a situation where rising rates and higher inflation can lead to lower stock prices. So it's a little bit of a trickier period of time right now. We have this pendulum that swings back and forth from overvalued to undervalued, and right now we're more at the overvalued stage. Really think 1965 or 1966.
Let's talk more about investing strategies. What about indexing investing, which is more passive versus more active fund investing? What's the better choice?
Yeah, so we think this is a time to start moving away from some of the indexing, not abandoning it altogether, but to also bring in some active funds into your portfolio. And for active investors, this is a good time to actually think about buying the dips and selling the tops. I like a strategy I call dollar cost averaging plus. So you're familiar with dollar cost averaging, where you put in a regular amount every month. But the plus part is where you peel off gains. Every time the market advances 10% is a good time to peel off some money from your portfolio to continue the dollar cost averaging. Maybe 6 months worth of dollar cost averaging you'll peel off. And then every time the market makes a new high, and it would be 10% gain from the previous high, that's another good time to peel off some money to accelerate your dollar cost averaging. Last thing, I would really watch the high yield market as the high yield market and its spread between the high yields and the treasuries for clues about financial trouble that might be embedded in the system.
What do you think is the smartest move that a small investor can make in this current climate in the stock market?
Yeah, we are. So we're using dollar cost averaging to bring money in. If we get a good drop, which we haven't had for a little while yet, we would move in a larger dollar amount and then using some of these rallies to peel some money off the table at this point in time.
Are you personally buying the dips in the stock market and selling the tops when the market is high?
Well, the smartest move that an investor could make in this climate today would be to be generous and love others, but that's beyond the stock market. So how do you do this in your portfolio? Well, you really think about the time spans that you have. So any money that you need in the next 5 years, you need to peel that money off of the table. It should not be in the stock market, especially at these valuations. When valuations are really low, maybe you could have some 5-year money in the stock market, but not at this point in time. And make sure that that 5-year money is in a safe place. Second thing, I wouldn't bet against America. That's what Warren Buffett just reminded us in his 2021 letter to investors. Don't bet against America. So last thing is, the last thing would be don't speculate with your what we call entertainment. Don't speculate with your investment money. Speculate with your entertainment money.
Well, thank you very much, John.
My pleasure.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.